If you're looking for highly educational market analysis, you're in the right place. You're in the Transparent FX Academy. I'm Nick, a top author on TradingView with over 190k reputation points. So without wasting any more time, let's jump straight onto the charts. In today's video, we will be doing something different from our usual analysis. In fact, I got a lot of questions about what is my personal opinion on the situation that we're currently facing in the overall stock market. So what I will be doing is a tutorial on when you're supposed to be zooming out to look at the bigger picture. In fact, we will be looking at the historical cycles that we had in the stock market, obviously by taking the S&P 500 as our reference, because it is the market of reference when we speak about the stock market. And we will be diving a little bit into how these patterns of bull cycles and ranging and accumulation areas have been playing out in the last more than 100 years. So let's start by defining what I have taken into account. So what I measured is the length of the cycles, so both of the ranging and let's say correction cycles, and obviously of the bull cycles. I have also measured how much the market has corrected percentage-wise during a range and accumulation phase, and how much we have gained during these bull cycles, and overall how many we had. Now, I started by looking at what was going on in the 1930 to 1955. This was the first ranging period in which we lost 83% of the peak value that we had here of the S&P 500. This range here lasted 25 years. Following from that, we had the breakout away from this range, and we had the first historical bull run, obviously starting from here, which lasted 14 years, in which we had a 306% gain in the overall stock market. Following that, we had a 12-year period of basically ranging and correction, in which we lost 49%, so 50% of the peak that we had during the bull run. And this one here, as we said, lasted 12 years. After that, we had the biggest bull run so far, which was a 1,200% gain, which lasted 19 years. Following that, we had the last ranging period, which obviously lasted 13 years. Everybody knows this as the lost decade. From an investing perspective, this one here is often referred to as the last decade, in which we had basically a decade, so 13 years, a little bit more than that, because many people measure the bull runs from the bottom, in which the stock market went nowhere. And then we enter inside of the current bull run, which has been going on for 8 years so far, in which we have gained so far around 206% from the breakout to the peak. Now, I know that everybody is freaking out, especially a lot of the mass media is pushing a lot of fear into the markets by just having this 12% drop that we had here. But this is exactly the moment in which you have to zoom out and notice that this kind of pullbacks here in a bull run are absolutely normal. In fact, if, for example, we go back even only of one bull run here, we can see how during this 1,200% gain, we had multiple pullbacks that were even stronger. In fact, here we had minus 20%. Here, this correction here, for example, minus 35%. So inside of a bull run, you will have many corrections like the one that we're getting right now. And if we go back, for example, also to look at this bull run here, in which we had the 300% gain, we can see how we had many corrections also here. This one here, minus 20%. This one here, minus 30%. This one here, minus 25%. So we can see how during a bull run, anyway, you will have many corrections. Now, if the market were to stop the bull run right now, okay, and enter from here inside of another of these ranging phases and accumulation zones, what would happen is that this would be the smallest bull run historically, both from a time horizon perspective, because it's been only 8 years. So it would have been the shortest one from a time perspective, but also the smallest one when we speak about gain, because we only gained 200% here, while even the smallest one was 300%. So we would have the smallest bull run in the moment in which we're getting the most money printing historically. We had trillions of dollars injected in the market in the last few years. So I find it very difficult for the market to just stop here and start one of those ranging phases, because it wouldn't make too much sense, because it would be the smallest both from a time and gain perspective in the moment in which we're injecting the most money into the market. So in my opinion, I believe that we still have at least 2-3 years inside of this bull run. I believe this is just one of those small corrections which are normal inside of a bull market, and I still expect the next few years to be pretty bullish before we then enter inside another of these ranging periods. So a little bit different video today. I wanted to make a little tutorial on when it's time to zoom out. This can be applied also when it comes, for example, to the crypto market. If you're in fear and you're doubting about your long-term positions, it's always a good idea to zoom out and look at the market cycles. And yeah, this is what I wanted to speak about in today's video. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of the strategies. Then you also get a daily market breakdown every day to see which pairs I'm looking for according to the rules of the strategies. And you also have the possibility to ask questions and get the answers the same day. So it's a very complete program. We're also currently running a special promotion. And to find out more, the link is in the description, and I will see you on it.